Welcome to an update for Federal Milk Marketing Order 33. This is Dr. Lawrence Jones with FARME Institute, and I'm recording this on the morning of January 16th. And this podcast is supported and made specifically for Nobis Agri Science, and I thank you for your support for this last year. So let me start with kind of saying I apologize for not getting you a report last month because things got a little bit crazy. We had the whole crew in, and by the way, what you're looking at here is my family, which is three PhDs, a MD, and then my poor son-in-law is just the poor executive at Google. So we'll give him a pass on that. All right, so let's start with the statistical uniform prices that were just released, and it came in for December at $18.20. And that was down $1.08 from December. And if we look back, right now we're at the top of the 2019 numbers and off from this peak, which has bounced $7.58 down from where we were, clear up here when those numbers were not sustainable. If we look across the country, you were very similar to, for example, Minnesota, Wisconsin. Overall, everybody was down about $1 on the statistical uniform price. And two things kind of dictated that was the deep pooling, and you guys are very good at deep pooling all of your class 4 because it's $3 and change above class 3, and then how the actual class has changed. And just as an example here, if you look at Florida, came down 46 cents, and they're very high class 1. You would say, well, they shouldn't have been down, but they're also 12% class 2, which then brought them down at 46 cents. So if we look out for the next year, are we going to continue to see deep pooling? And boy, it sure would look like it, that class 4 is higher than class 3 all the way through. And this class 3, you're going to hear me say numerous times, is under a bit of pressure here. This is your utilization of class 4 milk in the pool. And so you've been as very high as 11.8 million pounds a day, and right now we're under a million. So what that means is that there's about 11 million pounds a day of class 4 milk that's been removed out of the pool. The impact of that is that the farms that are on the co-ops that are depooling should get a separate depooling check, and so those should be some pretty large checks because again, 11 million pounds a day times about $19 a hundredweight should add up to amount of depooling money. If we look at our class 3 utilization, this tells also a very interesting story. You haven't been depooling for a while, but if we look back here, we were about 19 million pounds a day. We popped up to 22, 24, and we're right at 22. So what that tells me that we've got about another 3 million pounds a day of capacity since 2020. And again, that's adding cheese plants. There's no other way to do that than to add cheese plants. This is all depooling. Fat values are very strong. You guys are at 425, and the average across the nation is 431, which is up from last month at 428. And again, if we look at what you guys have done, last year you're at 416, and now you're at 425. So these have just been going up astronomically. And that makes sense. Here's the fat prices, so for a while here we've been clear above this $2.50. So as long as we stay above, 275 or so, I would expect you guys to continue to do everything you can to make additional fat. And if we look at the futures prices, the lowest that we're going to be is probably somewhere around March or April, 288. And so we're probably going to hang in this 290, 295, through the rest of the year here. So I would expect fat percentages to continue to rise. Protein's also fairly high, but that's a different story. So you're at 3.3, and I don't have it averaged out for the entire nation because we don't get that for the different federal orders. And if we look where you were a year ago, you're at 331, so we're very similar to where we've been. So we've not seen that same rise. And if we actually go back to 2022, it was about the same. And again, this makes sense. If we look ever since the pandemic, the price of protein has just kind of been plummeting. To make protein, usually I have a figure of about $3, and we've been below $3 here for quite a while. And if we look at the futures, this looks like it's going up. January is probably going to be as low as last July at $1.13. But this graph is going to be dictated by cheese price, and if we get cheese price not being supported where it is, this protein price will also be dropping, but we'll be way under $3 for protein. And the reason I say that is if we look out at the futures in blue, the actual components in orange, and we look at this July-August time frame, in order to get this, let's see, almost $3 premium, we need to get cheese prices up to $1.84 essentially. And so the question is, we're at $1.50, can we get 30 cents more on cheese prices and sustain that? While we're looking at these premiums that are built into this class 3, good to review kind of what we've told you before. We did a December call back in September for 50 cents, and so that was kind of up in here somewhere, and we now know that December closed at 16.04, so this added that 50 cents to the milk prices. If we look at October, we've done some 1875 calls. That would have been up in here somewhere. And if we look at January right now, we're pushing 1510. So that was also a very good set of contracts there. We have done some February 1850s. So again, that's going to be here on that graph. And if we look at February, we're going to be somewhere in the $16 range. So again, capturing these calls up here when it was very strong has been a good strategy for us. I have just been selling some $18 April calls. These are a little bit more problematic. They very well could get hit. But what we'll do is actually buy back that milk and protect that call. So if that happens, I'll show you how that actually plays out. So January is the front month right now. We've got one national dairy sales report. We're going to be right in here in that 15.10. You can expect butterfat to be $2.95, protein around $1.13, and other solids around $23. Kind of the big story in the industry right now is the slaughter data, because we are very, very low. And again, the last data we have is for March 30th, which include Christmas. So we knew that this was going to be very low, but this has been on a downward trend. And if we look back here, this was Thanksgiving, this was Christmas, this was New Year's. We're significantly lower than we were a year ago. And I throw in the calendar here because this is going to get resolved here right quick. If we look at the 31st of this month, we're going to get the cattle inventory report, which will allow USDA to true up their cow numbers and also give us the heifer inventory report. So the stories right now is that there are a shortage of heifers, but people just are not calling. And so we've got to kind of figure out what this story truly is here. I was holding off doing this morning until we got the global dairy trade. It just came out just literally a few minutes ago. It turns out session over session, it was up about 2.3%. If we compare that to our last spot market values on Friday, butter is very strong, so I don't expect us to be exporting a whole lot of that. The world market is the same as where we are, and it takes about 10 cents to get across. But cheddar is a different story. It's $1.91 on the world market, $1.56 for blocks on Friday. So we could expect to be exporting some cheddar. But let's remember that for November, we exported 7.3% of our production of cheese. So that's not a huge amount. Now that's up from last month at 6.9. But again, not a huge amount. Non-fat dry milk was $1.27, so I expect the futures number to actually come down a little bit. It's about a 10-cent premium to get it offshore, so at $1.27, we've got to be selling it for like $1.15 or so to be able to participate. If we put these numbers into our system, it looks like it increased prices about 57 cents, but the world market is still about 15.22 if we use whole milk powder. All right, I kind of want to look at some bigger picture things. So this is the federal milk marketing data relative to December and how it changed from November. Interesting, you guys were down about 12%, and Georgia was up about 11%. This means that you guys were moving milk south, and these are data from plants, not individual dairies, and so that would suggest that you guys exported a bunch of milk to Georgia. If we look at USDA, we're going to expect the month over month number to be about 0.1% above last month. And that's about what I'm seeing here. Some areas, 102.1, 0.1%. So again, I think it's going to be right around flat, plus or minus a little bit. Cow numbers have been in a big downward trend. As I said, we're going to get the cattle inventory report, which will true this out. My gut keeps telling me we're about 9.4 million. Right now we're 9.36, which is 40,000 below what I think we are, but that slaughter data is very compelling. So again, we're above the 2019 numbers, but below the 2018 when we had low milk prices. Milk per cow is just continuing to go up. We've been raising at about 1%, a little bit down this last month, and so we'll have to see if we're going to see a little bit of a paradigm shift. And fat percentages have just been astronomical as we've been talking. This is the national fat percentage out of the egg prices, and this is growing at 1.1%, and it's just going up, and it was actually up more than we would have expected here in December. Now the question that I'm asking is about the cheese stocks. This has been growing at 3% per year, and I just don't think we can maintain that. And if I look at where we are right now, I would suggest that we've got a new paradigm for the last 3 years. Now, the November cheese stocks were still the highest November on record, so I think they are very strong, but I think we've got a new paradigm. Post 2022, inflation's coming down. I don't think we're going to be putting as much cheese into cold storage, so we're going to have to look at those numbers and see how that impacts the prices long term. And by the way, this is probably a bit bearish because if people are not willing to put cheese into cold storage, it means it has to go on to the spot market. One of the things I love to calculate at the end of the month is kind of my rolling disappearance. It's really hard to look at disappearance on a month-to-month basis. So I put in a 12-month rolling average, and so it's kind of like your rolling herd average. You add this December, take away the last December, and it flattens things out a little bit. But what I'm looking at here is from 2020, somewhere in the pandemic, everything flattened out. We got disappearance, which is basically demand flattened out. Then we started up again, but where we are now is very much in a flat line. For the last year, we just have not increased demand at all for cheese. And the real question is this going to now take another step up, or is this actually going to end up with more of a step down? This would suggest we need about 9.4 million cows to meet this demand, and we've got about 38.6 million pounds of cheese disappearance per day. Let's look at things that are happening real time here. This is the spot market for cheese. We've hit kind of a support number here in the end of December, and that was the 18th of December. We've turned around and we've been coming up a little bit. What's interesting is the last few days, this slope of this uptrend is exactly the same as this slope of this uptrend back here. So way off of this, rocket ship up that we had, in July of last year. And so we're just kind of coming up at about 4 cents per week. And this next week, we're going to start figuring out if this is going to continue up a little bit or hit some resistance and settle off. Whey's the one to be watching. It's just ratcheting up. We've increased about 6 cents, and again, it's 5 cents per cent of whey. So this has added probably about 30 cents to our class 3 price. Butter is one that everybody likes to declare dead, and it just kind of keeps bopping around this $2.50 for support, and probably under $3 or $2.70 for resistance. And I've always been kind of a believer that butter is pretty well stronger than what everybody believes, and we'll see how that kind of plays out. But butter is continuing to add quite a bit to class 4. Non-fat dry milk has been in this upward trend just a little bit. I've not added this last global dairy trade, which is probably about flat for non-fat dry milk. So I'm going to expect this non-fat dry milk to probably hit a little bit of resistance and flatten out here. We'll turn to grains a little bit. That's the other half of the balance sheet for dairies. And boy, was this a kind of a bad week. These are Friday prices with corn coming down $4 3/4 a ton, and soybean meal coming down about 9. Part of that was just these reports that came out on Friday. We had the WASDE report and the grain stocks report and the crop production reports. And basically what happened is USDA said, hey, our crop in 2023 was much bigger than we'd thought, and so our ending stocks are much bigger than we thought. Now what's interesting is the wheat plantings have been down by quite a bit, but the market hasn't had a chance to respond to this, and I think the corn prices coming down has really brought this wheat down and not had a chance to respond, but we expect wheat to actually head up a little bit. Here are the channels that we've been building. Corn is very much at the bottom. It's hitting this support at about $1.75. The big story is simply going to be the bean harvest in Brazil, and can we get that second crop in of corn, because that's the big export. If we can hold this up, I think that will probably take off, and there's some question about what spring planting windows will be in the U.S. crop. Now beans have just really dropped off of that support number of 370 for bean meal, but I would be very cautious of this. I think this is probably going to head up if you've not got your bean meal protected. I think this high 360s, low 370s, a very interesting number to lock all that up. As we look at the milk prices, I was hoping we could hit this $19 on a 50-50 blend. We've just been bumping that and then coming off of it. For the next year, we're about $18.50. And for our dairy margin, which is the 50-50 blend minus 8 pounds of bean meal, 8 pounds of corn meal, I was hoping we'd get that above 13, but we're just hitting this 12.50, bouncing off of that a little bit and staying below that 13 number. With all that being said, it's now time to look at 2024 relative to 2023. So when we were budgeting for 2023, we said probably $5 off of 2022, and we came in at $5.14, and so I think that was a pretty good number all the way through. The futures contracts would now say that this year should be about 50 cents above last year. I think I'm probably going to be in the camp of saying somewhere flat to up a quarter to 50 cents. I think these futures contracts have a little bit of pressure under them. All of these are very good relative to 2021, but again, that was a low year at 1658. If we look at the drought monitor, it looks like order 33 is looking pretty good for Michigan. Slight drought there. Western Ohio, Indiana, Illinois has got a little bit more of a severe drought, and we've got some work to do on that drought in that corn belt. Now, one of the things that we got to keep an eye on that's getting a little bit of press right now, this is an index of how the polar vortex is behaving. So the black line is the 5-year average. The blue line is last year, and this is when we had a huge cold intrusion into the western part of Texas, and some of those areas that polar vortex got disrupted. It looks like it is being forecasted to be disrupted. Now, it was down a little bit here, but that did not end up with polar intrusion, but this next dip down in January is fairly significant, so we got to keep an eye on to make sure we don't have a huge cold front coming through the end of January, early February sometime. It's about a 30-day delay between this index and when things begin to happen. And I didn't want to end on that kind of sour note there, so I just thought I'd put in the Mississippi River, and as Eric Snodgrass said, this just went ballistic. So we are now about 13 feet above low stage, where we were last year in this same general area in January and February. And so the question is, we got a threat of flooding again? We don't have the snowpack that we had, but there are a couple things that saying this could actually flood again. But the good news is ships are flowing on the Mississippi again, and this problem back here has been taken out. Just give you a quick look at the calendar. This next Thursday we're going to have the National Dairy Sales Report and the advanced prices, and then next week we're going to have our big data, the milk production report, the National Dairy Sales Report, the cold storage report, and then the following week as I said, we'll get that cattle inventory and true up our cow numbers along with egg prices and the January classic component. All right, that's it for me. I hope everybody has a great month and a happy new year. And I will try to get back on a monthly schedule here.